Yeah. What up? It's your man about town, Virgil Berry, aka Stacks with the Facts. And y'all know y'all tuned in to another episode of Real Talk Podcast. And as always, I have esteemed, distinguished guests on the show, on the platform for y'all. You know, this is a real near and dear friend to me, to my right now. We childhood brothers. Been knowing each other, about 20, 25 years now, man? And if your friends ain't 20 plus, then you might want to check who your friends is. Anyway, we about to get into this episode right now, and I'm going to let my guy right here introduce himself to you.
What's up? My name is Adrian Moore. I'm a financial center manager at Fifth Third Bank.
Right.
Assistant vice president and officer of the bank.
All right. Now, what we're going to get into today is we're going to discuss the current financial situation with the stock market crashing. Past couple of days, it plummeted like hundreds and thousands of millions of points. And you know, my man right here, he's in the field. He's been working in the field for a good 10, 15 years now. Mm-hmm. You know what I mean? So he's the person who would have inside knowledge as far as from the aspect of the banking industry, because he's been working in that, and I'm pretty sure he's seeing the results of what's going on in the stock market right now. So we're just going to ask him a couple questions on as far as investments go, what to invest in, what not to invest in, and we definitely going to get into the housing industry going on right now too, because I know this is being affected by that. So just give us a brief description on how long you've been working in the industry, and go a little bit into how this current situation is affecting APRs and whatever else people might be affected by this situation going on.
Right, so I started my career in financial services probably not too long after I graduated college in 2005.
Right.
I worked for an elected official then who was effectively acted as the Franklin County's bank.
Right.
From there, I transitioned over to banking, to Fifth Third, being a banker and now a financial center manager.
Right.
For Fifth Third. So I think right now we're at the state of especially with the virus and the scare that the virus is causing.
Man.
For example, this time last year, rates on just let's just say like a normal product like a CD,
right,
or like a money market savings account, you might have been able to get 2.5% annual percentage yield on a 12-month CD, right?
Right, and this is the CD.
A CD is a certificate of deposit.
Right.
Effectively, what that is just it's a fixed rate product that never changes. Your principal balance never changes, and it's a guaranteed interest that you get. But unfortunately, it's not liquid cash, so that's not money you can go put your hands on. I mean, if you do need to do a withdrawal from a CD, you will incur a penalty. But again, your principal balance never changes.
Right.
So what you start the CD with, initially never changes.
Right. And that's why I like to have people like this on the show, because I always tell y'all when I have people on the show, I'm Stacks with the facts. So I got to bring y'all the facts. I got to bring y'all people who currently work in these various fields who can speak more intelligently than I can on the things that we're going to be discussing. Now, as far as the virus going on, how is that affecting rates and loans and all of that situation right there?
Well, I can tell you, a couple of things. Is one, the Dow dropped, significantly. It's lost.
If you got money in the stock market, get it out now.
Don't be that's not necessarily always a good strategy.
Right.
The point of the stock market is it's a marathon, not a race.
Right.
I think one of the things the virus is doing, like for example, the Dow dropped, significantly over the last 2 days. I mean, we're talking about it's lost a valuation that, pretty much most analysts are pretty much analyzing it to be somewhere in the neighborhood of $1 trillion in the last, and this has just been in the last 2 days. What that tells us is, a lot of the times like when we have our securities, they're backed by like long-term products like bonds and treasury bills. What ends up happening is now, since the market's crashing,
right,
it's pretty much at some of the lowest points it's ever been in the history of the Dow.
In the history of the Dow, we talking about lower than the Great Depression.
Lower than the Great Depression. We're seeing it. We're seeing signs of it being worse than the crisis in 2008.
What I've been telling y'all.
So what's happening is what the banks are saying is now that they can't rely on the confidence in the stock market just because of the volatility, is that the rates that they're able to extend to people, especially to get yields or to get returns, they're not able to do that stuff any longer. For example, right now my bank has a promotion for a 1% money market savings account that we can guarantee through September. There's been some talk internally about that promotion going away by the end of the next week or so.
You heard that? Y'all heard that? That's pretty fast, man.
And what that means is, so basically what that means is the market, the banks don't have the capital on hand that they can't, that they need to have to pay people the yields on those type of accounts.
Right. And this is why I love chopping it up with my brother right here, because this is going to make for future episodes being very interesting, because this is going to be something that I'm going to be discussing with y'all, and it's good to have a person who works in the field to bring the technicality and bring that balance to what what we're going to be talking about and stuff. So y'all can look forward to my guy right here, Adrian, being on more episodes when we're talking about finances and stuff. But this is what I wanted to ask and talk about now. We all know about loans and getting in the housing industry right now with the FHAs and all of that stuff. And I want you to go a little bit in on how specifically the market being in the state it's in, how that's going to affect the residential housing industry.
Well, when we talk about the residential housing industry, I think Columbus in general is probably has one of the hottest real estate markets in North America.
Y'all better do your research on that.
What that means is there's a lot of demand, but not enough supply, right? So that demand causes, what I'm saying, obviously, if we talk about simple laws of economics, as demand gets higher, supply's low, that means prices go up, right?
Right.
So I think right now in some areas of the city, I think you're seeing a lot of pretty much overvaluation.
I'm talking about super inflated prices.
Because of the demand. I mean, a couple of weeks ago, we went to go look at a house. I mean, pretty much, most houses in this market, are selling on an average in less than 8 days and going over asking price. And having multiple offers on them. So I think what that means is, with the market's doing what it's doing, two things are going to happen. One is we're hearing some chatter about the Fed slashing the interest rates again. For example, the federal interest rate has been slashed about 4 times in the last year alone. This would make it the 5th time. And let me kind of provide some context for that.
Yeah, go in.
The federal interest rates haven't changed in probably the last 10 years or so, since 2008.
Yeah.
So effectively what the Federal Reserve is trying to mitigate is the consumer confidence, right? They want to make it affordable for you to get a loan.
Right.
So we're even just talking about even on a 30-year mortgage, like a fixed mortgage. We're talking about, and I don't know the exact number, in your mortgage rate, the rate that you get on your mortgage is all contingent on your credit score, right?
Of course.
So the lower your score is, the higher your rate's going to be.
Right.
The higher your rate, the higher your credit score, the lower your rate's going to be. But again, there is a ceiling.
There definitely is a debt ceiling.
And I think that, the point I'm trying to get to is, I think that, one, it may be cheaper for you to borrow some money, right now.
Right.
And that's the thing, borrow some money, the cost of money over the
money is a commodity. I want y'all to know that.
Yes.
It's publicly traded on the stock market.
Absolutely
yes,
it is. And yes, we do have one of the strongest currencies in the world, but at the same time, I think
in the world,
the American dollar is one of the strongest currencies. But
that's starting. That's another conversation.
that's another conversation. But again, as far we have one of the strongest economies.
Yeah, right now we do. Yeah.
Right. So you know what I'm saying. Obviously, we have China, but that's a different story. But anyways,
Yeah.
Getting back to the rates, you know, we're seeing rates are going, you know, historical lows right
Historically
now. Right?
low. I'm seeing people. I know people who got 4% and 4% interest rate on a 30-year loan. Man.
So my advice is, I mean, if you're looking to buy a house or you want to take a loan out, this might be some of the best time to do it.
Right.
Again, you need to think about the cost of the money.
Right. And this is perfect segue. Now, I'm about to put my man on the spot right now. I know I'm about to. Y'all hear me talk about the climate action and resilient plans, the smart grid coming in, and the Green New Deals. Now, at the banks, I wonder if, and I'm going to ask you, are y'all aware of these policies coming in? Are y'all aware of this Green New Deals and how this is going to affect the housing industry? Because the reason why they're slashing rates like this is because it's being done to intentionally put poor people even more in a poorhouse, because they know, just like y'all listen to what Adrian just said, they know that a crash is coming. It's inevitable. They cannot continue to do this and it be profitable. So now you got all these cheap APRs, 4% APR on a 30-year loan to people who already can't afford their house. Now, as this smart grid comes in, smart meters, smart water meters, right? This is coming in. People are not going to be able to afford the renovations they're going to have to do to uplink and upgrade their house for the smart grid. Now, I want to know, is in the banks, because I kind of already know because I do my research, but at the banks, is this anything, are these policies even being mentioned, or are they made privy to people working in the banking industry?
So I think I'm sure they are. You
Right.
know, however, it's not really inside of my scope of business what I do on a
Right.
day-to-day basis.
Compartmentalization, y'all. You only need to know what you need to know to do what you need to do.
But one thing I can say is, yeah, I do think that, I think it really starts with the basics. I think it's more of I think, you know, finance and all that stuff
Right.
is comes from a train of thought.
Right.
You know,
I agree.
You know, I mean, I was listening to something on the way here, man, that Royce the 5'9" freestyle.
Right.
You know, man, Royce the 5'9" said, "Money talks, but wealth doesn't speak." You know, it speaks for itself.
Right.
So I think sometimes, man, we, you know, like for example, man, if you've grown up in an apartment your whole life, right, your goals from as far as what you can see
is to get a house.
It's to go get another apartment.
Oh, another apartment?
Right? Sometimes people don't have that perspective to say, you know what,
Right.
maybe I need to go buy a house.
Right.
Why do I keep paying somebody rent when I can go own my house?
Right.
But I think it comes back to that mindset that you have.
Right.
And
I agree with that to an extent, but also we got to get into where the loans and stuff. We got to get into that.
At the same time, I think
that's going to be for another episode, y'all.
You have to figure out, you know, one, you know what I'm saying, but does everybody understand how credit works?
No.
You know, do you know how to establish credit?
No.
Do you know how to track and monitor your credit?
Most people don't.
And what is that? And what does credit actually mean?
What does it mean? Now we segue in perfect into what I was about to just talk about. Because see, if we're going to get into credit, now we got to get into how is money created. What gives it its value?
Again, stuff like the markets back your current, you know, stuff like the market backs current, you know, like the Dow, the, you know, S&P, those things back the value of our currency.
Right. Okay, so like I said, man, I'm gonna always have people on here to bring y'all the inside information, the actual facts, people working in the field. Once you just give the people some contact information. If y'all want to open up a bank account, you want any financial advisement, you want to try to open up a loan and see what works for you, go ahead down to Fifth Third, holler at my man Adrian. He's going to give y'all his contact information right now.
Yeah, so my office is located at 2465 Northwest Boulevard in Upper Arlington.
Right.
You can reach us at 614 481-7347 is my direct line to my office.
Right.
Or you can feel free to shoot me an email at adrian.moore at 53.com, and that's the numbers 5and3.com.
Right. You already know if y'all want to get in contact with me, hit up AYE Real Talk Podcast on YouTube. Like, subscribe, share, comment. You know, if y'all have any questions y'all want to give to my man, he just gave y'all his contact information. Hopefully he'll be able to help you out. This has been another. I really enjoyed this episode right here because we got into some real technical stuff. Be on the lookout for more episodes, more content. You already know what it is. It's your man about town, Virgil Berry, a.k.a. Stats with the Facts, and you have now just seen another episode of Real Talk Podcast. Peace.